7 cryptocurrency exchanges that could 10x your trading profits in 2025. Data-driven analysis is revealing why smart traders are migrating to new generation platforms and how $1,000 account can compound to 10,000 within, let's say, 14 months without leverage. So we're looking at a silent transfer of wealth while retail traders are obsessing over Dogecoin pumps and NFT drops. Institutional algorithms have been quietly siphoning 2.8 trillion in daily volume toward a handful of next generation exchanges. The migration isn't random, it's mathematical, right? So I've analyzed quite a lot of trades across over 23 platforms, over 180 days, and the results were actually really stuck, right? Traders using legacy wallets like Coinbase Pro left 340% more profit on the table compared to those on newer platforms, and the data is literally changing people's perspective on this spread massacre. I like to call it how 0.5% becomes 47%, right? So there's a hidden tax that's killing your returns. Traditional exchanges advertise, let's say, 0.1% in trading fees, but actually conceal the real killer here, which is the spread markups. And our analysis actually reveals that, let's say, for example, Binance BTC to USDT spread 0.02%, which is kind of the industry leader there. Coinbase Pro BTC USDT pair spread 0.19%, 9.5x wider, right? So you've got a legacy platform average of 0.31%, which is a 15.5x wider. On the mark, they're in on a $10,000 Bitcoin purchase. That's $31 in hidden cost versus just $2. And that's got a compounding effect over 20 trades. You're down $620 before considering the market movement. So, for example, let's look at a platform like Gravity, right? GRVT, an institutional grade exchange, operate in 0.01% spreads through high frequency market makers, effectively eliminating that spread tax for accounts above $5,000. So, with every sort of millisecond, that's costing money. And for example, if you place an identical $50,000 market order across platforms, let's say during that March flash crash, with the execution time and the slippage, you can see on different platforms what that would really amount to, right? So for example, with Gravity, 127 milliseconds execution time, 0.03% on the slippage. Real cost really coming up to about $15 MEXC. If you're looking at 198 milliseconds, 0.07% on the slippage, really amounts to about $35 in real cost. Binance, $60. Coinbase, it ends up being about $445. So during high volatility, slow execution really transforms that $50,000 order into like $49,555 on Coinbase. That means $445 evaporated in literally 1.2 seconds. And Gravity's sub-second, 130 millisecond execution preserved that 99.97% of that trade value. So access that institutional grade infrastructure on these new platforms. Check out the links in the description. If you're thinking about the funding rate, arbitrage, at the end of the day, there's about a 47% annual risk-free rate, right? When you're looking at the derivatives cash cow that nobody talks about, perpetual trading, funding rates, which create unpredictable or predictable income streams, right? So a monthly, let's say a 12 monthly analysis would look at something that would show a bull market average funding, longs paying shorts 0.08% every 8 hours, bears, that's a bear market average funding, shorts paying 0.06% every 8 hours in the neutral market being that 0.02% oscillation, right? So by maintaining balanced positions across, let's say, a platform like MEXC and Binance, you can generate 47% annual returns purely from funding payments, which completely is market neutral. And that strategy, for example, you can go long $50,000 BTC on MEXC with negative funding, short the same amount of BTC on Binance with positive funding, collect 0.14%. Every 8 hours, that's 168 daily. That's $61,320 annually. So hidden fee structures are also something to think about when you think about wealth transfer. So the withdrawal extortion racket, exchanges just don't profit from trading. They've built invisible toll bridges as well. So you can look at some of the comparisons, platforms, withdrawal fees, actual network cost, and the actual markups with big Unix here on the 0.0002 BTC. The network cost being that 0.00001 BTC. It's a 1900% markup, right? On all of these platforms, you can see there's a different rate. And of course, this is not like standard. I'm just giving you an example of some of the numbers, but the monthly impact here, active traders making 10 withdrawals at the end of the day could lose as much as 0.25 BTC, 15,000 to just inflated fees on traditional platforms. Whereas it on platforms like Gravity with zero markup policies, you can save high frequency traders over 180 grand annually. So you can think about that as well. And there's always lessons to learn. If you look at some of the losses in May 2025 when Bitcoin dropped 23% in 4 hours, exchanges with shallow liquidity so catastrophic. Slippage, right? Low liquidity platforms 15 to 40% stop loss slippage. High liquidity platforms 2.5%. And if you look at an institutional liquidity platform like Gravity, 0.8% maximum slippage on $10 million orders. And the difference between a 2% stop loss and a 25% stop loss on a 100 grand position is 23,000 saved by just choosing the right exchange. So these are things you definitely want to be thinking about, right? So just think about, obviously, realistic projections based on your fee savings alone, traditional exchange path. For example, you can look at the optimized exchange path and just looking at the differences in all of that. So the 7 exchange portfolio platforms for maximizing your profit, I think, based on my beta tested configuration. Gravity, definitely 40% volume, institutional spread, zero withdrawal fees. MEXC, 25% on volume. Best altcoin selection, competitive futures, Unix 15% of volume, advanced order types, low latency, K6 10% on the volume, but emerging market focus, unique pairs, really great platform. You got Tabbit, you got Binance, you got Bybit, all of these really kind of looking at how that all goes, right? So, I can also really break down the whole a strategy, and I've outlined it in the article, which I'll really attach in the description of this video. But at the end of the day, guys, these are some of the things that you definitely want to be thinking about if you're looking at platforms that can actually help you 10x your profits by saving you a lot of money. This is the alpha you need in a bull market. If you want to learn more, make sure you go to decentralized.news. Peace.